Tim Quast, founder and CEO of Market Structure Edge. Tim, good morning. How was your weekend?
It was fabulous. We were in San Antonio. It was, So one of our favorite spots on the planet is the Hotel Emma in San Antonio.
Is that the place with the river that goes through it?
The River Walk.
The river. So the River Walk is several miles long. So it basically begins in the Pearl District, and then if you walk up the river, that will take you downtown.
Okay.
Walk down the river. Yeah. So it's a great walk, and I'm an evil rich capitalist, so I can stay there. Huh. But if you use Market Structure Edge, you can too. It is just a fabulous place. There are fabulous restaurants there. It is just a lovely spot on the planet. Dennis, I've looked at houses there. I don't own one there.
This guy owns a house every
Did you go to the Alamo?
We've been to the Alamo many times.
You know what?
We didn't go this time.
I think you forgot.
Did I?
That was a joke. Never mind. Okay. He did not remember the Alamo. All right, moving on. Tim.
We remembered the Alamo. Okay. We know it's like 3 blocks off the Riverwalk, right at about Navarro. That's where you.
Tim, we've had a couple of days now to digest all the big reports from last week, right? Apple, Amazon, Microsoft, all of them, right? Where are you seeing the broad market sentiment right now?
So I would take those in 2 pieces, and if you've talked about this already, I'm sorry I missed it. 2 things strike me. One, with Amazon, and of course I think of the stock market from a market structure perspective, but that does not mean I'm inured to or ignorant of economic factors. And so I think it's important, if you want to take a long step back, to realize that Amazon is a touchstone for a consumption economy that depends for 70% of GDP from consumer activity, from consumption. And so it should get our attention that Amazon, as a touchstone, is telling us that there's trouble. And I also think from a market structure standpoint, if you think about the size of these firms, Amazon, Apple, you have to put Microsoft in that mix, that it's very difficult for a market to continue to chug higher if there are troubles in the largest components. And there may not be. I would look at Apple a little bit differently than that. And I think it's worth comparing the supply demand trends in Amazon and Apple and Microsoft. I think that Apple and Microsoft are a story. First of all, they're generational. Think about this. My entire adult life, those 2 stocks have been center points. There was a time when my business partner, my mentor, we were laying bets because he was a big Apple fan, and
Who was that, Tim?
The fellow's name is Steve Chineka. He was a big. He owned a group of papers. He was a newspaper guy, and he gave me a start early on when I was young and ignorant and foolish in my 20s, and I became the president and chief operating officer of one of that group of businesses, and that's how I got my footing in the business world. But I thought Apple would go defunct. Well, look at it, right? Do you remember the time they were down to about 3% market share? Apple or Microsoft basically had 97% of the market, and they were down to supplying a few, middle schools with, Apple IIe's. And everybody walked through that door after Steve Jobs moved off to go run Next. And what's the maker of Toy Story, the movies? Pixar. Yeah. And then he had to come back and fix everything, and boy, did he. And you have to give kudos to Tim Cook for the great job that he has done. But Apple has become a product story, and Microsoft is a services story. One is a true SaaS company, and one is really banked on products. And clearly the supply chain has hit product makers more than services companies. And you really see that in the market structure for Microsoft versus Apple. So I don't know, Spencer, if Apple is a signal of deep trouble to come. It clearly tells us if there's one booming or glaring conclusion that we can draw as a culture in the United States about what has occurred, it is that you can't shut down your economy. You can't do that. That the magnitude of the disruption is like slamming on the brakes if you're the head engine in a freight train that's a mile long. The boom, 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 boom effect from that will take us a long time to unwind that, and it's going to hit product companies. And so maybe as traders, we have to think about that.
Tim, can I ask you something? Where do you think the market would be if we didn't have the pandemic?
Well, it's a great question.
Ooh, that's good. It's a tough one.
It really is. So would we be in better or worse shape? We certainly, and I was reading a string on Twitter, and I can't remember the fellow's name because I would love to hear your thoughts. Particularly, I think Spencer, you're the youngest of the lot here, and it's about how the millennials behave differently. So the string begins with saying 30-year-olds in the United States right now are the poorest that in 70 years. They don't have the kind of savings that the people before them have had. They didn't have the discretionary income that my generation had. I think about what I was making 25 years ago and what people are making now. I was making $100,000 25 years ago when I was a kid, right? So there's been a huge impact. And Joel, this is the interesting thing. And I think the string has some merit, that the Robinhood phenomenon, the Bitcoin phenomenon, the millennial role was a huge risk-taking role, a casino-like response to a generational opportunity that the pandemic presented that otherwise would not have happened. So to me, there's no question we would not have had this incredible trading environment without the pandemic. But we also would not have had the immense economic damage that we have seen, and that the consequences of which we've not yet experienced. In my opinion.
Great answer.
The Twitter thread that Tim is referring to, I just put the link in the chat because I also saw that thread over the weekend as well. So, yes, basically the take here is that very good for some, not so great for others, and we're still understanding it. But the crux of it was like young people are taking inordinate risks, and they're okay with that because of the situation that they're in.
Is this YOLO? Is this like just the mentality of the younger person? Is that, hey, you only live once, so take a chance here? And you know what? Younger people should take chances. So
it's the time to do it.
Yes,
you're absolutely right. It's one of the famous things that Mark Cuban said. He said, the time to take chances and to roll the dice and to try to do things and to have no fear of failure is when you have no obligations.
Right.
When you, when you got houses and cars and kids and wives, you can't do that. You can't go put everything on Red 34. So if you want to do that, and I'm not knocking it. People who are half my age, I'm not, or more, I'm not knocking it at all, that you take chance when an opportunity comes along, you take chances. But I think it's important for us to understand cause and effect and how that's going to affect our opportunities to trade. Because it's one of those things that fits Steins Law. And I've mentioned this before. So that's Herb Stein, father of Ben Stein. Ben Stein goes all the way back to Ferris Bueller's Day Off. Bueller. Yeah, Bueller, exactly. So he said, if something cannot last forever, it will stop. And it sounds like a funny line, but it is a reminder that if there was something that occurred here that cannot be sustained, it's going to stop. And there's going to be a consequence, and it will be significant. We know that.
Yeah, and you're seeing this in the options market. I happen to have seen this data yesterday from the WSJ just about the forget stock market, forget stock equity flows, right? Options flow is really where the game is at, right? Because there's so much more money being made selling the options flow and on the options volume than there is on just straight stocks. So.
Vastly more money per contract for a Robinhood or a Schwab or an Ameritrade who sells that order flow. Plus, there's and think about that from the flip side. And we talk with public companies about this all the time. They pull their hair out saying, "Well, why doesn't my stock move?" And we try to explain that, well, that's because the trade isn't in your stock. If what I'm trying to do is find a fixed for floating trade where the fixed component is your equity, I really don't care. So I go long short your equity. I just don't want it to move. But when I have 5-day out of the money puts or calls, I want those to move. And so the economic endpoint is how the derivatives trade, not your equity. And VMware has been a great example of that, leading into the big spinoff that just occurred. So they're trading on that today, by the way. That was completed on the 29th, where Michael Dell reduced his ownership of VMware from about 82% to about 40%. And I think VMware has a lot of opportunity because of that. Here you have suddenly an equity of the size of Lam Research, which is a great exposure to the semiconductor equipment industry. And VMware is like that for the cloud. I mean, it's a beautiful 80, it's good. It will be 80 to 100 billion in market cap. And I think there could be a lot of passive interest in that. Dell could struggle, though, because they've gotten rid of this beautiful thing.
I mean, VMware has struggled for a long time. Maybe now that it's on its own. Like if you look at the last 4 years, think about what technology companies have done, and VMware has gone nowhere. VMW. So, I mean, you think there could be this, now that it's, not as much under Michael Dell, maybe this is a catch-up trade, maybe.
I think it could be, and it's very easy, folks, to see all of this stuff in Market Structure Edge. Let's just take a look at that. So I'm going to share this, marketstructureedge.com. And you guys know, who you listen all the time, you can do this for free if you're not a user already. Just do it for a couple of weeks, and you can follow. This is, it's an important concept to grasp about supply and demand. And yes, Dennis, we could see for a solid year, VMware has been effectively 60% short. Well, we say if over half of your daily volume is coming from borrowed stock that a trader does not want to have a position in at the end of the day, it's very difficult for your price to rise. There are always exceptions to that rule, but it's certainly been true. And so we could point this out and say, well, Dell's is half that. Well, which is the long side of the trade and which is the short side of the trade? Well, it's not rocket surgery, as the saying goes. And so and look here, this is where they are right now at the spinoff. So here's just the last 30 trading days, and I'm looking at VMware, and the demand side is going to be this aggregation of 4 reasons people buy and sell and how that affects prices, 10-point scale. And it's peaked and it's coming down because of this spinoff. They transferred $12 billion to Dell holders. All right, so that's a huge handoff, but it will be out of the way. And look at the supply side, short volume way up here at 70% of trading volume. And so when that normalizes, if that normalizes, which I think it will, there's going to be a real shift that occurs. Even if you look here, the trend line is beginning to flatten, but look how long it has been at or higher than 50%. That's a quarter. If I look a full year at this, there the trend line is flattened, but look at where it is. It's basically at 55%. Well, it's very difficult for a stock to rise when that's the case. And by the way, traders, if you want to trade options, look for that. You can look for stocks that have 50% short volume or more, and you could put a little pressure on the equity one way or the other, and you can make money in the puts and calls. And it's not the price isn't going to move that much on you. So, and clearly people do. I think hedge funds understand that. So it's interesting to see. So let's look at Dell. Dell and I think that from a supply demand perspective, look at the reversal here. Why would everybody be long Dell? Well, because they're getting $12 billion. They're getting $27 a share from VMware. Well, everybody wanted that. But that's a one-time event. And when that's over, what's likely to occur? Well, I think that short volume could normalize in Dell and come down in VMware, and that the trade will shift to VMware. We'll see. But I think that's a very logical conclusion that reflects a set of characteristics that's very easy to grasp. So we'll see.
All right, there's a nice trade idea from Tim Quast, the founder of Market Structure Edge. Joins us every Monday. MarketStructureEdge.com. Link on the screen. Link in description. Tim, always a pleasure, sir.
Always good to see you guys.
Thanks,
all right,
Tim.
have a good one.